Welcome to part 3 of the video in which we are talking about Morgan Stanley. So, Morgan Stanley, the brokerage firm, has cut its Sensex target by 11% to 62,000 versus the previous target of 70,000. So I'm not talking this about. It is the Morgan Stanley himself is talking about that. That previously Morgan Stanley was giving a Sensex target to 70,000 compared now what they have revised, which is around 11% lesser, which is 6,200, which is again near about 10% to 15% greater than the current target of Sensex, because currently as we speak on 10th March 2022 the Sensex is about 54,000 and they are giving a target of 62,000 at the close of this year, which is fairly 10 to 15% upside. I would like to ask one simple question from Morgan Stanley, which they're not going to be replying. Number one, in India, there is a concept called index management. Now, what the hell is index management? Now, the index management means now whether this is Sensex or whether this is Nifty or whether this is Bank Nifty. I repeat, whether this is Sensex, this is Nifty or Bank Nifty. There is one problem, and this problem is deliberately created, mindfully created. And that problem is the top stocks in these indexes are holding much more percentage than the lower stocks. Why? So if I wanted to move the index, I repeat, if I wanted to move the index, that would be very easy. I just need to manipulate the top stocks. And the rest job is done. So apparently speaking, it look like whether this is Sensex, now whether this is Nifty or Bank Nifty, it look like that it is going up. But the apparent situation or the ground reality situation is it is not up. Rather, the stocks are falling down. But in media, in TV channels, in newspapers, it feels like it is going up. But it is not going up. Similar is the scenario with the Sensex. Now, when any foreign brokerage house, now whether this is Credit Suisse, this is UBS, this is Citibank, this is Goldman Sachs, this is JP Morgan Chase, this is CLSA, this is Jefferies, this is Morgan Stanley, or any other foreign brokerage house who operate in India, they give a target of Nifty or probably Sensex or any other index. I just tend to ignore it. I simply tend to ignore this because I just need to manipulate the top stocks. When say I means the operators. The operators needs to manipulate the top stocks and index goes up. So example, today you buy the top 3 stocks of Nifty. Top 3 stocks of Nifty. Nifty will go up. So any big foreign institutional investors, without quoting the name, and do you know that how they operate in the Indian market? We all knew this about. So any big foreign institutional investor to whom the money is not a constraint, not at all, they just need to fix the top three stocks and DEX will go up. But does that mean the ground reality is intact? Does that mean that the companies who are fundamentally correct, reporting profit on year basis, sitting on a very strong balance sheet, are they actually getting the prices? No. A very good and strong balance sheet like Rural Electricity Corporation, REC, is being replaced by a loss making company called Zomato. And who did that? The same. Paytm and few other loss making companies is in Nifty Next 50 index. Irrespective of the fact that investors lost heavily in these stocks, they are still in Nifty Next 50. Now, what is that, guys? What exactly is that? So when you get a target that somebody coming on the Indian media and probably a foreign brokerage house, maybe a bank in himself, is giving a target that he see Nifty at 25,000, Sensex at 1 lakh, just tell him where is the research report, on which research it is backed up. You please open Google and you see that many players are giving the targets like they see Sensex at 1 lakh. What the hell it is? What the hell it is? Is the Sensex is really at 1 lakh? Is the ground reality of India whereby millions of jobs are lost? The medium and small enterprises, MSME, they are reeling under a huge debt crisis. The government is raising a huge amount of money. The revenue deficit of the country is beyond expectation. The companies of India are standing on a huge debt and a huge printing of money is happening. And many other factors like inflation and the delay in the projects, the corruption, the political things, and many other factors. Do you really feel that Sensex deserve to be at 1 lakh? Or probably Nifty deserve to be at 24,000? Do you really feel so? I don't think so. Because even in this article, which is published by the Money Control and titled Morgan Stanley, the research report is missing. It would be better. I'm not saying that Morgan Stanley have no right to give the recommendation. They have right to give the recommendation, but before giving recommendation, it would be better. I would repeat, it would be better if Morgan Stanley will speak that these all fines, these all sanctions, these all things were imposed by the global regulators. It would also be better. It would also be better if Morgan Stanley will share the research report detailed. When I say research report, I mean detailed, so that people can see this research report and contradict. Rather than giving a senseless or a baseless target like you earlier saw 70,000 and now you're looking 62,000, probably 11%, 12% down, and you feel we are going to be trusting you. And of course, tomorrow somebody from Hindi media or maybe Indian business media will copy this. that Morgan Stanley see Sensex at 62,000. So you start buying. This is how exactly, I repeat, this is how exactly our foreign brokerage houses work. And they would continue to be, let it be honest. Even after this video, nothing is going to change because they know how to manage India. This is what we would like to cover in this via taking this article. This is Rahul Mugan from Treasury Consulting Group. You know my personal number 9899242978. 9899242978. Have a great time ahead.